Today, we are going to talk about a topic that gets brought up quite a bit. So when you guys watch these videos, you'll go through our website, Find My Way Home, and sometimes you see some of these videos and you got specific scenarios. And recently, I've gotten quite a few scenarios about how do I buy the home that I'm currently renting? Hello, this is David Zai with the Zai Mortgage Team. I want to qualify for a loan to buy a home I'm in right now, or different variations of that question. So I felt it's really important that we address this. You could have gone through like extenuating circumstances such as bankruptcy or foreclosure or short sale, and you're having to rent a home. However, ultimately you'd like to purchase a home. However, with that being said, you're in a home that you really like. I mean, it fits all the needs, and who likes moving? Moving's a drag. It's just absolutely terrible. With that being said, how do you buy the home that you're currently in, and how do you structure it when you are negotiating your lease? So first of all, we're gonna dissect this a little bit at a time. When you're writing your lease contract, it's really important to know what the market rent is at that time, how much you're putting down, because they're overlooking some of your extenuating circumstances, and how much is going to go towards the purchase of the home, and how much of your market rent and how much over you're going to pay, and how much you want that to get applied towards a loan. And I would say, a lot of people use that as a savings vehicle. So let's just say the market rent is $1,500, they'll pay $1,750 every month so that they can get a $250 rent allowance that kind of gets added in. So every 4 months you have an extra $1,000 that's going to go towards the purchase of the home, whether it be used for down payment or closing costs. You may even want to negotiate like maybe some closing costs up front when you're doing the rent to own type scenario. And sometimes that's what it's called, is a rent to own scenario. So you negotiate up front the house at $250,000 with $10,000 in closing costs. Your deposit of $5,000 that goes into a security deposit / earnest money deposit when you buy the home, and maybe even the extra $250 in the monthly payment that can help you with qualifying for the home. So why is this important? Because we all, by nature, you make $10,000, you're going to want to spend as much as you want to spend up to a certain budget. And if you don't allot for that amount, it won't give you a true sense of what it's like to own a home. So this is why it's really important. We don't know where the interest rates are going to be when you purchase the home. Let's say right now the average interest rate is at 6%. However, we know that you just got discharged from a Chapter 7 bankruptcy and you want to get an FHA loan, and that's going to be a 2-year waiting period because you don't have an extenuating circumstance. So in 2 years from now, if the rate goes down to 4%, well, good for you. You've saved 2% off of the current interest rates. However, what happens if it does go to, let's say, 9%, right? That's where, training your mind to put that $1,750 into your mortgage payment or your rent payment instead of $1,500, that's going to be a really good thing. And then secondly, if the interest rates are higher, because you've been saving money from that extra $250 a month, you can make your mortgage payment more manageable by buying down the interest rate or buying down points upfront cost to make your interest rate a little lower, to give you a monthly payment that's more close to $1,500 or $1,750, whatever your wish list is. Secondly, with that extra money, if you've saved it up for 2 years, and let's just say that's $3,000 every year because you paid the extra $250, you put $5,000 down, that would be 3, 6 plus 5, that's $11,000 total that you have into the transaction up front, plus the $10,000 in closing cost. And if you bought it for, let's say, $200,000 and 3.5% down of that is only $7,500, you could use the additional money to kind of pay off some debt or have that back, because you've been saving it as part of your housing payment. So I know there's a lot of ways that you can structure this, and I've really seen both sides of the pendulum when it comes to doing these home purchases with the rent to owns or scenarios like this that I'm talking about. When you lock down the price, like I had a guy that locked down a price on a townhouse in Virginia Beach for $300,000. He paid on it because it was a sales contract, owner finance sales contract. Every time he made a monthly payment on it, the good thing is that paid it down. So when he came to me for financing, he only owed about $270,000 on it. But we know what happened in the last couple of years. Values increased significantly. His townhouse that he's buying now in Virginia Beach is worth over $450,000. And because he locked the price in up front, he's walking in with a lot of equity. So if you have any questions or concerns on how to buy the home that you're currently in, or how to negotiate the rent-to-own contract, feel free to reach out to me. My name is David Zai, and I'm with the Zai Mortgage Team, and I can be reached at 757-478-8493. Thank you. Bye.